What is going on, investors? Hopefully, guys are doing well out there. And I stress doing well because if you own shares of PayPal, we might need a little bit of a moment of silence for you guys because during the regular session, there was some signs of hope. Stock was up 2.25% to about $175 per share. But in the after hours, we are getting smoked on this one, down $29 per share. We'll talk about what that means from a technical perspective. I think you can imagine when you go from $310 per share all the way down pretty close to $145 per share, something is technically and fundamentally wrong. And we'll talk about that on today's show. We'll also talk broadly. There were signs that you needed to get out of this one. And in fact, I had gotten into this stock and I got out of it. I got stopped out of it because I did not want to continue this downward fall on this one. Talk about the importance of setting stop losses. Talk about the importance of risk management when we're talking about stocks like PayPal. Now, what are some of the fundamental reasons? Look, we know technically the stock has completely fallen off a cliff, but what are some of the fundamental reasons? Why are investors looking at these results when this company reports earnings and just selling them? And we'll talk about that. So we've got revenue growth here coming in at $6.92 billion in the most recent quarter. That is just 13.1% year over year revenue growth. And look, if you're looking at Verizon, you're looking at AT&T, they love 13% revenue growth, but we just did a video on Google. They're growing in the mid 30s. We just did a video on AMD. They're growing in the almost 50% revenue growth. Look, that's where the money flows in this market. Like it or not, they're going to flow to revenue growth. And on top of that, you've got a PE ratio of this one from a forward perspective at about 37. That was before these financials were reported. My guess is it's probably still in the mid 30s. That's pretty rich. We're also talking about a company with $192 billion market cap. Obviously, it was way higher than that. It was darn near close to $400 billion. And we've got just, and I say just, $6.92 billion worth of revenue in a quarter. Now, what also has investors reeling on this one is the guidance. So it's not only the fact you're getting somewhat paltry revenue growth when it comes to this company. Obviously, you look at other companies in the stock market, they're growing far faster than this. But what also has investors a little bummed out is the fact this guidance actually really came underneath expectations. EPS, earnings per share for the upcoming year for 2022 was expected to be between $4.60 and about $4.75. We'll give them credit that maybe they're sandbagging by about 10 cents or so, and it could get up to maybe $4.85, maybe even on a really good day, up to $4.95. Well, consensus was for $5.26, and consensus tends to be a little light, okay? Consensus, since this is a bunch of analysts that want to look like they're right to their investors and their fans, they want to look like they're right, so they usually come underneath just a little bit what the company's expecting. Well, they are way over it, okay? So this company is absolutely missing the mark when it comes to earnings. Also on that revenue growth rate, they're expected to grow between 15 and 17% currently, and then minus eBay 19 to 21%. That's just not good enough. I'm sorry, it's just not good enough, but the good news is the valuation's getting better and better on this one, and as it continues to pull back, we could find some areas where we could actually call this not necessarily your traditional value stock, but we could find value certainly compared to prices that we saw a few months ago with PayPal. Now let's come to that $6.9 billion worth of revenue. Again, not great growth. Last year it's 6.1, so you're barely growing. You only grew that by about $800 million. Looking for the full year, you went from 21.45 billion up to this 25.3. Again, just mediocre revenue growth, quite frankly. And then on top of that, your operating expenses continue to grow. You went from 5.1 up to about 5.8. Again, you grew this by over 700 million, and you grew this by barely 800 million. And so your operating income's barely going to budge. You went from 963 operating income from a quarterly basis last year. So you take your revenue, you minus off these costs, you get down to 963. That's what you made operating the business. Okay. And this year you barely made any more. You made about $1 billion. From a rounding perspective, these numbers are essentially identical. Okay. So off 6.9 billion worth of revenue, you barely grew your operating income. We see for the full year paints a little bit better story. Okay, we went from $3.2 billion on that operating side up to 4.2, but it's not great. Okay, these aren't great results. And then from a cash flow perspective, paints a little bit similar story. Okay, we pull down some net income, we get to add back in some transaction and credit losses, some depreciation and amortization, and we see cash flows basically moving in the right direction. correction, but it doesn't have investors excited, right? So you could say, well, look, cash flows went from 1.3 to 1.7. Well, yeah, the stock's down 16% in the after hours, so nobody cares. And same for the full year. You went from 5.8 positive cash flows up to 6.3, but again, nobody cares. And then you see that you burn through about 5.5 investing, and then you burn through a little bit more on this financing, and you basically, your cash actually went down in the most recent year with PayPal. Now, from a broader perspective, let's take a step back and just take a look at this transaction and credit losses. I always like to see this when I look at a Visa, a MasterCard, and certainly PayPal as well. We see those actually went down year over year. That's not necessarily telling you anything great about PayPal, but it is telling you the consumers are defaulting less. And so for the broader economy, the macro environment, that's actually a good story, okay? And then same for the full year, you went from 1.7 down to basically $1 billion. You love to see that, okay? Again, from a PayPal perspective, it does reduce their cost, but from a macro perspective, it does have us excited. Now, so the two things that I see that really stand out with PayPal is the guidance coming way under what consensus was. And again, consensus tends to sandbag a little bit as well. There's no analyst on the street that wants to seem like they're way off predicting what a company is, because then their clients and the institutions that follow them won't trust them. They want to come in line, usually a little bit under where the company is, because they know the company tends to sandbag. Well, PayPal's underneath that, and that's a disaster. And on top of that, you're growing at just 13%. The company is guiding for slightly better revenue growth, but when we look at this from a technical perspective, it's completely broken down. And you had several chances to get out of this stock. That's represented by these red lines. Now, did you need to get out right on the number? No, but you need to set stop losses right underneath this. Your first stop was at about 220. You didn't get out there. Okay, I actually got in this stock in the 180s. It hovered there for a minute. It looked like it wanted to stay there. This was a fantastic level at 180, but when I bought it at 180, I set a stop loss somewhere down here at about $175, because I said if it breaks here, look out below, and that's exactly what's happened. It's gone from about 175. Now we're down here at 145, and quite frankly, I don't think it's going to stop, because I will hover around this little gap here. We are just above this little gap that sits at about $140 per share. You break 140 on this one, and you're retracing all the way back to these two green lines that we've had marked out here on the channel for a while. I personally would not touch PayPal stock until you got to about 120 per share. So you might ask yourself, well, I'll buy the dip. This one's way down. Okay, yeah, you could buy it here at 145. I don't mind that, but just understand your upside is back up to this area, back up here to about 175. See, you got about $30 in upside. You will hit some resistance here, okay? Because there's people that are in this stock much, much higher. Look at the volume on this one, okay? You had a lot of people pile into this one, okay? Up here at these higher levels. As the stock moves up, those sellers are going to materialize, and I would expect them to materialize pretty much in force as we got here to 175. I think it's going to be really hard sledding for PayPal to get back up above 175, okay, minus some kind of takeout offer or something like that. But this is a $200 billion company. There's not many companies on the planet that could afford to take this one out. I think more likely we're just going to keep this downtrend going, and we're going to reach a level of support down here between 100 and 125. So your downside is actually even more than your upside on this one. That's why I quite frankly would steer clear of PayPal, not only from this technical perspective. I wouldn't touch this until we got into this sideways consolidation. I'd still like to see it bounce as well. This stock is just a falling knife, whatever you want to call it. I'd want to see it either bounce here at 120 or bounce down here at 105. Again, just like it did here at 179. If you take your shot at this one, please, I'm begging you, set a stop loss, because if you don't think this one can't go lower, you're crazy. If it breaks 105, you're coming down here to 75. If you break 75, you're coming all the way down here to $40. I mean, that is what's going to happen with this one if it continues to break down. Obviously, the more this one goes down, you get bigger and larger institutional investors. Maybe you get some kind of buyout, but I'm not exactly sure who would be in the market to buy this one. You still have a massive valuation of 192. Although, again, if you slash this stock price in half, well, all of a sudden you open the door far more to competitors out there that could gobble this one up. I'm not saying that I'm predicting that, but the further this one goes down, something like that becomes more and more likely. That does add a little bit area of safety. Now, the good news is you have some support down here. The problem is it's still $20 to $40 lower than where the stock is, and you got a big giant gap here, $5 underneath the price of the shares. If it does not hold this level technically, it is very, very ugly. It will likely fill that gap and move lower. You're waiting for signs of reversals. It did make a somewhat of a sign of reversal more recently, but that has completely broken down. The guidance is not going to give investors any room for confidence. You've also got mediocre revenue growth. You've got stocks like Google. You've got stocks like AMD. You've got multiple stocks out there that are far outperforming this one. PayPal, I'd be on the sidelines on this one. If you do get back into it, I repeat, if you do get back in this one for whatever reason, you need a stop loss on this one because these shares are looking absolutely ugly from a technical perspective as well. I am sorry. That was a disaster for PayPal. I wish I had better news from you, but you come to the investor channel for the truth, for the reality. And the reality is I would not touch this one with a 10-foot pole until we see a sign of a reversal. And it doesn't seem like it's going to come anytime soon. My apologies if you're in this one. Make sure you set those stop losses next time. That was PayPal. Good luck with your investments.